Morning, Steve Frady in Chicago with the morning grain comments. Yesterday, we had kind of an interesting day. There wasn't really a lot of news out, but corn rallied pretty sharply and beans broke. I think over in the bean market, the market's a little bit concerned about all this talk that maybe China may be slowing down their demand for beans. A large amount of beans are coming into China, pushing their crush margins down, and maybe in the future slowing their future demand. There's also some concern that maybe we'll make this simple transition in February from U.S. supplying the world of beans to South America supplying the world of beans, and that there may be some open, unshipped sales of beans on the United States books that eventually may be canceled. And so this offered some weakness in the beans, kind of triggered some of the big machine traders to liquidate positions where they were long beans and short corn. And with the volume is down as much as it is, you had a pretty big reaction into the corn market. We continue to reduce the December contracts open interest as we get closer to first notice day, and that's kind of impacting also the market as these big positions get out. As they get out, we're noticing that the open interest, especially in beans and wheat, is declining, and that maybe they're not getting back in or rolling as much into the markets ahead. If we look at the markets in general, the corn market is still has a big supply here in the United States that's kind of overhanging it, and we could see demand pick up with these lower prices, but it may not be enough to offset the bigger supply. And so in general, corn prices are still bearish. In the wheat market, we're trying to make a transition between maybe some lower supply in Argentina, the U.S. smaller hard red winter wheat crop, and also Russian quality issues, to the fact that Europe, Canada, India have big crops, and they're trying to satisfy the nearby demand. And as we look ahead, 2014 wheat crop prospects are off to a good start, which means wheat prices are also too high. In the beans, it's just a battle between old crop beans, where the U.S. situation is tight, and we're going to use a record amount of beans potentially between now and February. And the outlook for South America is pretty favorable. We're watching Argentina the last couple of days because their president has reshuffled the cabinet, and that could raise the possibility that they could actually start devaluating their currency. And if they do that, the Argentina farmer is sitting on as much as 500 million bushels of old crop beans that he hasn't sold yet. So yesterday, Argentina values were softer. They offered South Korea some cheaper meal than U.S. and really below break-even value, suggesting that maybe they think the Argentine farmer is about ready to sell. And if he begins to sell those beans, nearby beans could be under pressure. Long-term, normal South American crops, normal U.S. crops in 2040, and we look out to the November 14 contract, and it's just way too high. So we're a quiet market. It's that time of year in the holidays where we tend to get quiet. Open interest is declining, and so we would expect choppy trades. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.